Hello, good morning Internet. Today is Tuesday, December 11th, 6:57 a.m. Arizona. I'm in Arizona, so that is, let's see, almost 7 o'clock plus 2. That's 9 o'clock Eastern Standard Time. So we come to our chart, and we're looking at it. You can see these are the sells, buy and sells from yesterday. TradingView puts these arrows up there. It's in my settings. You can have those to be there or not. I don't necessarily focus on them. I like them when they happen to keep track of my what's going on. But so my concept of trading is like fishing, and I don't actually like to fish because it's very boring. But I like to catch these fish for some reason. So because they're full of money. So that's 34.66, 34.66. I want to be in that. I also need a sell stop at the low. That's 34.05. Somewhere down here. This is up there for, we need it. So we got long here just like that. We need to put a stop loss on. And we'll move it in to protect. You can see that we have on risk now 2.28, which is above our limit of 2. So we reduce risk. 1.62%. We may get stopped out right here. That's fine. I have an opportunity to move my sales stop up for a better entry because prices moved up, creating a better entry for a downward move there. So price came all the way back down. I like watching what these 1 minute bars because it happens fast. Every 1 minute there's a bar painted. So, and we're prepared either way if it goes up or down. We don't have any biased opinion. Our job is to move our stop loss, adjust our stop loss to reduce risk. Okay, so this number right here of profit and loss is irrelevant to us. What we're concerned about is this number right here, 1.63% at risk. Keep it under 2 and then reduce it continually. So the market moved down and it took out our stop loss there. So we took a minimum loss there, 5,000. So sometimes it'll blow right past your stop. 0.64% on the table here. $1,000 profit. I want to move this down to break even. Incrementally. What do I have on the table now? 0.13%. If I can get a risk-free trade, that'd be outstanding. There it is. Locked in $78 of profit. It's a risk-free trade at this point. Right? Of course, minus slippage, but we're prepared for that. Now it took out our last buy stop, so we're bringing this one down. Okay, to be prepared to go long again if it goes long. Go ahead and prepare by putting another line out there. 34.80. put my stop down to lock in some profit. So we have negative 0.53 at risk. So that's what I mean by continually to reduce risk. Once you get it off the table, you continually to reduce risk. Same thing we did. If we moved our stop loss down this way to get our risk off the table, and market keeps going down, we just keep moving our stop loss down again for the same principle, reduce risk, meaning locking in profit at this point. So this very well may turn around or come back. We're prepared. What do I have locked in here? 1,016.40. Let's see if we can get this stop loss any closer. So it took us out there, which is okay. We have a sell stop, so we bring to the low, see if we can get back in. So it's the way I trade, it's a dynamic thing. I like to I put these lines out here prepared. Excuse me. Okay, so we wait for it to give us an immediate high that I can move my buy stop to for a better entry long if it goes. So the idea is to keep this trigger point range, right? This trigger range. So if it breaks long, we go long. If it breaks short, we go short. We want it to be narrow as possible. The closer that we can get these two orders together down here, like really close, really close, really close, really close, the greater the likelihood of it triggering one or the other order and moving in a direction of profit really quick. Because it has to move, right? Right. And then I just move my stop loss. See, now here it triggered down. I'm going to go ahead and add a stop to this. Playing with fire by really not having one preset there, but so we have just 0.64% on the table now, and we're looking for any reason to move our stop loss to take that risk off the table. Market may turn around and jump right back up, we don't know. But we do have a buy stop, a buy entry right here. Just in case. So we're not predicting the market, we're not thinking. I have found that when you predict the market, you're projecting your thoughts and feelings and your internal reality onto the market. And that's, it's never going to go that way. It's very rarely. So generally when we get into a trade, these move fast, either way. It moves fast either into loss or to profit. So we'll just okay, so it gave me a reason to reduce risk, right? I can bring it down here all the way near term. What do I have on the table now at this point? 0.18%. Again, I'm not interested on the dollar amount of that figure. It's irrelevant to me as a risk manager. I am purely focused on this number right here, 0.18. If I can get that off the table, we can have a risk-free trade. And the idea is to get to a risk-free trade as fast as possible. So that's why we're looking for any reason to move our stop in. There it is. It goes down further, so we have more profit. It's a reason to move it break even at least, and off the table. So now my risk on this position is negative 0.05. So I moved it down to 0, and on the number line, you can imagine I just kept reducing risk past 0 by locking in profit. This may come up. We don't know. We're going to bring our stop right up here in case it does jump up. We're prepared to take little losses. No more than 2%. We want to keep them at a minimum, of course. That means we can, by dictating that our losses are small, that means we can dictate the number of trades that we can trade. And so we necessarily want to, give ourselves a large number of trades. So we limit the losses to a very small number. That means that if you were to get all of the losses in a row until your account was emptied, how many trades would it be? Do you want it to be one trade? You can blow out your account in one trade, 2 trades, 10 trades, 100 trades, 200. So we're going to go ahead and move this stop down, mark it, lock in some profit there, negative 0.25%. So I'm reducing risk. It's going negative, right? So there it goes. It drops off the cliff. That's what we were waiting for. And we move our stop down to lock in profit incrementally, so that if it jumps back, we already have okay. So that took out our sell, so we bring another one down, and I'm going to put a buy stop loss on this one. Seems to be moving fast. We want to limit our profit. We can keep it at 2%. Buy stop I can bring down. Give me any reason. We don't know what direction it's going to go from here. All we know, let's see what we give to the bank. 47.64 for today. So far. So we're fishing. We put a line out here, 34.24, and we're going to see if market can come down it's like a giant fish, some kind of unknown creature. We can't really see. We only see its effects, and its effects is moving price. And the only way that we can prepare to take profit off the table in this kind of environment without knowing the direction is to say, well, I'm going to give myself the opportunity to participate in either direction. And we can do that with these buy stop and sell stop orders. And this is what the professionals do. And they actively move them once they get into a trade so that they can lock in their profit, constantly reducing risk. Right? So we got a new immediate previous bar high, so I can move my buy stop for a better entry. See, if it comes back up here, right, we're not waiting to get in. We've already locked in a significant amount of profit. We're just compounding our returns. We woke up, I think we had 300,000 this morning. This is paper trade, okay? And you can do this on your TradingView account. And you'll say, yeah, but you can't do this in real life. And perhaps we win it. Perhaps we would. We'll make videos of that when we get there. That's for sure. I like trading this Bitcoin because where I came in, at market open at 7:30 for our time at the SPY, right? It's the ETF measuring the S&P 500 index. So we got a new immediate high for that previous bar, so I move my stop down lower. Now I'm on either side, and I don't want to move my sell stop too close over there. Perhaps I should. What's on the table there for that? 2% at this point. So if I do, so I can reduce risk by moving my sell stop closer. Let's do that. Now we have 0.43% at risk. And if it jumps up to positive territory, it's going to do one of two things. See, I said I'd like to get this difference here as small as possible, because we know it has a high probability of breaking out. I grab my stop loss and give me up to break even as fast as possible. I may get stopped out because it might just very well come right back down, but let's see what's on the table there. 0.05%. Okay. So 0.03, we're positive. We've got a risk-free trade on. Okay, didn't explode that time, but we're ready. Come on, baby. So, what do we get out? Unscathed, positive 78. So that's okay. Those are good trades. We take a small loss, small win. We need a certain number of small losses to cover up the number of small losses. I mean, we need a small win so we can cover up the small losses, so that when the big wins comes, they can just add pure profit, right? It just increases equity into our account. I've been studying this for 13 or 14 years, and finally in the last week, I just decided to it just all came together. You know, it just all came together. I started taking my indicators off. I was using these and trying to predict the market based on those things, and I found over 13 to 14 years that is a losing deal, because these values are all derived from this price value. They have nothing to predict of the future. They are all derived in the past. So, and I don't know what direction it's going to do, right? So my posture is I'm going to go at the high and the low, and I'm going to follow price. I'll move my stop loss up like a money manager, a risk manager, to reduce risk and get the risk off the table. Once it's off the table, we're into a free trade, and then there's no worry. We got to minus slippage. We're prepared for slippage. Keep in mind, especially for some markets like this one, Bitcoin slips a lot. It jumps. That's what slippage is right there. It slipped. We call it a drop, a gap, and we can handle that. Sometimes it happens against us. Sometimes it happens for us. Imagine waking up one day and having an extra $50,000 in your account because it gapped open and you had a position open. I mean, can you realistically see these opportunities? So I'm not proclaiming Bitcoin to be anything. It is a technological revolution, as I'm sure you're all aware of. I'm using it as an asset class to trade. Okay, so and this is of course through TradingView, and so it gives me a short and into immediate profit. I want to move my risk off the table, so I move my stop loss. And we can see that we are at negative 0.05. These trades tend to take off fast. I can move my stop to lock in some profit here. There it goes. Oh my goodness. We want to definitely take that off the table. Don't we? Incrementally, to get a better and better exit. Look at that, 16,000, negative 4.7%. So we're off the table there, and I don't have another sell line in the market. So like fishing, there it goes. It's just jumping down, crazy. So we'll bring this buy stop down there. Now we have a wide range. So the market is very volatile. I'm not sure which price it's going to go. I want to put a stop on this one to limit my risk exposure because of this volatility. That leaves 1% on the table, right? So yeah. So trading 781. There's 10 seconds left on this bar, and then we can move this buy stop down. I don't know where price is going to go from here, right? It could go down further. It's going down. It could go up farther from this point. So each trade that took off the table, it was positive 14.9, right? $15,000. You know, that was in what, 1 minute? That was in 1 minute. So here it goes again. Stop loss all the way down into immediate profit. Take our risk off the table. There's another. What did we get? Positive 2,100. That was in seconds. So we're doing sell. It's like fishing, and we're prepared to reel that fish in real quick. Okay, I want to bring this down to the low. I want to put a stop loss order on it. Okay, something happened here. I'm long, and I do not have protection on. Oh, I entered an order. Is that my risk for that trade? That was weird. 0.31%. Okay, that's acceptable. This is probably going to come right back down, yeah, for sure. I didn't mean to do that. What I meant to do was to take this one and put a stop loss order on. Okay. So our risk is defined immediately right there, 1%. I'm going to bring this. Whoops. Oh, shoot. Any reason to reduce risk, right? .69%. This very well may just turn around right now. The market has given me a new high, which I can use for a better entry. Going long. I have a sell stop in. I also want to get a second sell stop in. Down the way here, let's do it at 33.80. This is for backup. When it takes my trade off of the table, I don't want to have to put the trade in then. So these movements are what produces, quantum leaps in your account. And we want to get this risk off the table as fast as possible. So we want to narrow that gap. Okay, here it is. Move it down to a risk-free trade. Now move it into lock-in profit. What do we have there? We have negative 0.43% on the table. Locked-in profit of $1,400 minus slippage. Can I do better? Nope. So it took us off the table, so I move my next sell stop down, my next line. I'm getting ready. See, like, we're putting bait in front of the market. Like, this is like some beast, right? That's swimming underwater here, and we're like continually trying to trying to put this bait in front of it. So what do we take off the table there? 300. Negative 1,600. So we get these fluctuations. We're up to 326 in our account. Let's put a stop loss on this one. 42. Let's put our risk at 2. Stop loss. So we'll go ahead and put that stop loss in. And 2% risk, please. So it's going to move one way or the other, right? The closer we can get these buy orders, sell orders, entry orders together, the closer we can get them together, the higher the likelihood that price is going to end up outside of them. One or the other is going to be profitable. Move my stop loss to lock in the profit. We might get a string of losses. I'll pull up my daily log of trades, and we can see my returns. So let's do something. What do we have on the table up here now? That has 1.67% on the table. Oh, that's because this one. Oh yes. So this stop loss is for that one. And I move that there. And move this stop loss down here. There. Now it's on the table. 0.86. So it moved us. Get our stop. Where's our stop? It's the red one for that. Move it up there. Lock in some profit. You're immediately at $23,000 in profit. This is like phenomenal. Like, who does this? $21,000 in profit. Move our stop loss in. Okay, we got taken out. We want to move another buy stop in. 34.40, and bring it down to near the high. So what do we take? 14,000. Price moves fast, and there's some slippage there. So instead of 23,000, we had 14,000. But still, I mean, who's complaining about that? That was in 1 minute, right? That was in a few seconds, actually, like 20 seconds or so. Okay, I got a better entry for this sell position in just 8 seconds down here. So I'm moving this in. Take my risk off the table. .78%. Sorry, count 341,000. This is in minutes, guys. Unbelievable. Unbelievable. So it went down and got our entry and then came back immediately, about to take us out, but we only have 1% on the table, so that's a totally acceptable situation for us to be in. Do I have another sell down here? So I need to bring another sell. I think of these as fishing lines, and I want to cast them out, you know, so near where current market is. Remember, it's like an underwater beast. We don't know like what it is. It's just it moves fast. Whatever it is in this thing that it's in, that we have the ability. This price, Not sure how familiar you are with mathematics, but my intent is to get this range as short as possible, as fast as possible, to increase the likelihood that price will end up on either side in a hurry. Does that make sense? The closer this range is, because it's moving volatile, let's go ahead and put a stop loss order there. Same thing with the south side. Okay. We got stop losses in to limit our risk. We'll pause and wait. So we have the chance to move the sell stop closer. We're not sure which direction the price is going to go, but we want to be prepared to have the best trade as possible, and to do that is to be closest to where price is currently. So the movement from where it's at. Right? Does that make sense? Of course. Smart crowd. Move that. So price is going to go somewhere here very soon. Pause and wait. Normally it doesn't go sideways very long. So it moved us in. It had a gap open. Here's our stop loss for that trade. So we're going to move it in close. What's on that? 0.42%. Now sometimes in these situations where it has a breakout from idle price, it usually goes in one direction and then might turn around. Reduce risk, every opportunity I can, as fast as possible. Okay, so we're off the trade. There it goes. And we may actually get long at this point, right? We may put another stop in there. Go short. Again, if we need it. And a stop loss. There it goes. Into immediate profit. Take our risk off the table. And we want to be prepared to lock in some profit here. So incrementally. Yep. In case price comes back down. Look at that, $9,000 in a second. Took us off the table. We can put another line out there because it usually continues. So it did. Darn it. Didn't have a stop loss on. Move these down for a better entry down here. 38 seconds before you can move it. There's a stop loss. I want to reduce risk every opportunity I can. Okay, there it goes again, immediate profit. Reduce risk, get that off the table. Okay, where are we at? Sell. It was on buy. I meant to hit sell. So you gotta be careful what you're doing here. Don't get on the wrong side of the trade, especially one without a stop loss. Does that have a stop loss? Which one is it? This one down here. So what is on the table here? 0.31%. I don't know why they got in there. Wanted to put a sell order in. Yep. So now we're prepared if it skyrockets back up, or if it goes back down, whichever way it may go, we're going to follow right behind it. This is what Bill Williams meant when he said in his lectures that he would follow price around. He would, like the tail of a dog. He would just follow right behind it. I understand now what he was saying. Now we got an immediate long position. I don't want to move the sell stop. What I want to do is move my stop loss. Of course, you got to be prepared. Okay, so there it is. We have negative 2.67%, and incrementally get that off the table. Alright, so that was taken off. We want to put a buy stop in at that price too. What was that? 34? 12? Alright, that's my son, so I'm going to have to go pause this. Alright, so we're prepared. We have a sell stop, you know, at the immediate low. It turned into a fractal. This is what generally happens. We'll move our buy stop to that high. It came up there. We have this wide range here. We're not sure where price is going to go, but we're prepared to follow. I want to show you that last trade that happened, you know, within a minute. Took in $20,000. So our account was up to $364,000 now. So we'll pause and wait. Okay, so this jumped up. Gave us a loss here. Got us long. And we want to be prepared to go long again. I'll tell you why, because these things tend to jump back and forth. Move it to the high, throw a stop loss in, no more than 2% at risk, so we can see. Is there like places to do this? Am I allowed to do this? Like, oh, see, you learn as you go too. Sell stop. Okay, so that market's bracketed on SPY. 1 minute chart just opened, market just opened there, so we're going to be tracking that one. These ones you got to watch fast. I don't have a stop on this one, do I? What's our rule of thumb here? Reduce risk as fast as possible, right? What's on the table there? 1.09%, that's acceptable. Let's see what happened down there. We're at 357, a couple losses. It's okay. It looks like a W bottom right here, but we're not sure. Again, we're not predicting price, we're just following along. We are prepared. We got short here, so that means I need a secondary stop in order. That's for backup. That's okay. Making a loss is okay. It's part of the game. Right? It's no harm. Price generally is going to go one way or the other. Looks like we got involved here and taken out. So it came up and came down for our minimum loss, which is okay. I can move my sell stop to meet new structure low. See that? And there's no stop loss on that one, is there? No. This one is ready to go if it breaks out. It does have a stop loss, and we would like to move that up. So it just hopped there. We like to see it continue. Let's move that stop all the way up. Let's put 2%. Oh, it took us in. Nope, we're here. So we have a stop loss here. We want to move it up to that opening bar. Okay, to reduce risk. What's on the table there? 0.79%. We got in at a worse price than we thought because it opened up, but we can take our risk off the table at this point. Immediate profit. And we're waiting for it to come up. We'll put up another buy stop out there. I like to be prepared. If it moves in our favor and we lock in profit, we want another buy stop out there. So now I can move my stop up as fast or incrementally, so I can lock in some gains here. I can move my sell stop up, can't I? For a better entry if it decides to turn around and go shorter. I don't have another sell stop down there, I'd be prepared. Sell stop at the bottom, down here at 33.95. Okay. Okay, we can move into some. So we're going to attack this direction. Look at that. When you get that price movement explosion, we can move our stop loss up to lock in profit incrementally. It may back down, but we're prepared to move our next buy stop in place. So there it goes. Look at that, just jumping up. Look at that. As I was saying, didn't I just say that? Look at that. Oh my goodness. Move our stop incrementally, and we're off the table. Let's see what that in just a few minutes of $46,000. So, and now we can move this sell stop all the way here to be short at that point. Take our buy stop. Oh yeah, I forgot I can do this. Watch. Right click there, go to trade, and hit buy stop. Okay, hit enter. So there's our buy stop, sell stop prices. This I want to put a. I need a really tight stop here. I found that these prices, when you get to these tops, they like to go up and then come right back down. So we want to see it just break past it and limit our exposure all the way, right? So here is the current price. Let's see what the spider's doing. Okay, continually marching sideways, fantastic. It's going to break out sooner or later. Can you believe that in 1 minute you had $46,000? See why these $5,000, $2,000, $4,000, losses are negligible? Because when that one move happens, which we were expecting, we were prepared. I shouldn't say expecting. We were prepared for it, and that's why we profited, because we were prepared. So the market favors preparedness. This is what I found. So I'm just yeah, sure we're paper trading, but it's it's a concept. Have you and so I've never been able to get a paper trade account positive. So that's a milestone in my trading. I want to move for a better entry point, right? As best I can. Market moves fast. We want to limit our exposure. We always know that. I can move this up like that. What's on the table there? 1.5%. So I look for any reason to reduce risk. I'll bring it to the high of this current bar. There is we're at break even right now with 0.9% at risk. Where's my next sell stop? I'm gonna bring this up, yeah, into market view so that I can, okay, out of the way. So, and then see what happens when we get those big, I'll move this down, reduce risk. Oh, it jumped up. So we may get stopped out here. But after these big price up, you know, it continues down. There it goes. I can move this stop down here. And this entry at the immediate high up here. Okay. Good enough for me. What's on the table there with that risk? I want to always be less than 2% on any one trade. Okay, I want to bring this next sell stop in, you know, close to this for another break low. Throw a so we got some market movement here. We came down, got our short entry. Now it moved up. We reduced our stop loss to reduce risk, so that's there. We also got a short here, put a stop loss on to limit risk. So we have 0.16%, less than 1%. You know, how about that? Less than 1/4% of risk on the table. And we're prepared for it to go long again if it will. Yes, you may. Move my stop loss. That should be that one.
Dad,
Yeah.
can you give me something too?
So we moved our stop loss down. We got a risk-free trade on. This is negative 0.21%.
Yeah.
Okay, so I took this out. No big deal.
Give me that.
Yeah.